Bismillah. Assalamualaikum warahmatullahi wabarakatuh. My name is Aysar Dimas Putra. I'm from Accounting 2019. Uh, in this occasion, I'm going to present my proposal seminar for my thesis or Skripsi uh, with the title The Influence of Financial Ratio on Going Concern Audit Opinion with Company Size as a Moderation Variable. With my supervisor, Sir Adam Zakaria and Sir Muhammad Yusuf. Uh, let's okay, let's begin with chapter one, introduction. Uh, First is the background of the study. The company was founded as an entity with the aim for generating profits and maintaining continuity or going concern. Then the company will make financial report as a communication tool to describe and communicate the condition of the entity to interested parties. However, information presented in the financial report is a statement from management, which does which doesn't necessarily reflect the entire actual performance of the company. One solution to reduce the risk of information contained in financial report is to conduct an independent audit by an auditor. In the audit process, the auditor assesses the provisions for recording information, whether the information recorded is in accordance with what actually happened and in accordance with accounting standard. Then the final result of the audit will be presented in the form of a report in the form of an audit report. Therefore, the auditors are needed so that the financial reports issued by the company are not misleading and provide an assessment of whether the company can maintain its viability or going concern 12 months after the audit report is issued. There are still differences in research results or research gaps in terms of research results and the variable use. In the variable use, in the research process, financial ratios are used and the source used as the research object in the financial report of an entity itself. The results of the financial report are a reflection of the performance process of the entity that issued the financial report. So that what is research really comes from the entity and the condition of the entity itself. This is the basis of the research for the researcher to conduct research with the title The Influence of Financial Ratios on Audit Opinions with Company Size as a Moderating Variable. So the question would be, first, does profitability influence the provision of a going concern audit opinion? The second is, does liquidity influence the provision of going concern of audit opinion? And the third is, does solvency so so the solvability influence the provision of going concern on audit opinion. And the fourth is, can company size moderate the relationship between profitability and provision of going concern audit opinions? And the fifth is, can company size moderate the relationship between liquidity and the provision of going concern audit opinions? And the sixth, can company size moderate the relationship between solvability and the provision of going concern audit opinions? And for the goal, first is to find out whether there is an influence of profitability on providing going concern audit opinions. The second, to find out whether there is an influence of liquidity on providing going concern audit opinions. Third will be to find out whether there is an influence of solvability on providing going concern audit opinions. Fourth, to find out whether company size can moderate the relationship between profitability and the provision of going concern audit opinions. Fifth, to find out whether company size can moderate the relationship between liquidity and the provision of going concern audit opinion. And the last is to find out whether company size can moderate the relationship between solvability and the provision of going concern audit opinions. And the fourth research benefits, first is theory benefits. First is would be improving and expanding researchers' understanding regarding going concern audit opinion can be provided, especially on variables that can influence the provision of going concern audit opinions, namely financial ratio of variables. Second is providing empirical evidence on the results of previous research or that have never been tested before regarding the influence of financial ratios on going concern audit opinion. And the third useful as a reference for when research, especially for research on the influence of financial ratios on going concern audit opinion. And for practically benefits, the first is for the company to find out what factors can influence the provision of going concern audit opinion. The second is for the public, providing information to the public or users of financial reports regarding the integrity and validity of financial report. And the third is for investor and potential investors as information and consideration regarding going concerns so that investor and potential investor can make the right decisions. And the fourth is independent auditor to serve as consideration and reference material for auditors and providing audit opinions to clients regarding the issue of providing going concern audit opinions. And we move on to the chapter 2 for the literature review. Supporting theory for the first supporting theory is agency theory. Agency theory is a theory that describes the relationship between two individuals with different interests. First, as the agent who manage the company, and the principal as the owner of the company, where both parties are bound by the existing contract. According to James McLean in the Battier states that the owner or the employer or principal is the party who evaluates the information, and the agent is the party who carries out management activities and makes decisions. And for the second theory is the signaling theory. Signaling theory uh, is by Spence Engineering explains this theory that the sender or owner of information provides a signal or signal in the form of information that reflects the condition of the company which is beneficial for the recipient or investor. This theory also explained that companies must provide signals to the market to differentiate between companies with high quality standards and companies with low standards. The third supporting theory is audit opinion. Audit opinion is a conclusion given by an auditor on a series of audit tasks with emphasis on the conformity between financial reports and generally accepted accounting standards. And for the next theory is going concern audit opinion. Going concern audit opinion is an opinion issued by an auditor to determine whether the company can continue as a going concern. The next theory is profitability. A profitability is a ratio that measures a company's ability to earn or generate profits from activities. The next theory is liquidity. Liquidity is a ratio that measures a company's ability to fulfill or pay off its short-term obligations. The next theory is solvability. Solvability is a ratio that measures a company's ability to fulfill or pay off its long-term obligations. And for the last theory is a company size. A company size is the size scale is in from the total assets of a company or organization that combines and organizes various resources. Move on to the hypothesis. The first hypothesis is profitability on going concern audit opinion. A high level of profitability that has been validated by the auditor can be taken into consideration by the auditor when writing an opinion relating to the sustainability of the company's business. Management's ability to optimize profits from the company's operating activities can show that the company can survive for the coming period or vice versa. The second hypothesis is liquidity on going concern audit opinion. A high level of liquidity that has been validated by the auditor can be taken into consideration by the auditor when writing an opinion relating to the sustainability of the company's business, which is the ability of the company's current assets to meet the company's short-term obligation. This indicates that the company can be free from default and can show that the company can survive for the coming period or vice versa. For the third hypothesis is solvability on going concern audit opinion. A high level of solvability that has been validated by the auditor can be used as a consideration for the auditor in writing opinions related to the sustainability of the company's business. The optimal composition of the company's capital structure can certainly increase the company's ability to maintain the continuity of its business or vice versa. And the fourth hypothesis is the influence of profitability on going concern audit opinions with company size as a moderation. If the company experiences an increase in profits, assets can increase and get bigger. The connection with company size is that the bigger the company, the larger the assets at home. So it can reduce the impact of bankruptcy and will be able to reduce the provision of going concern audit opinions by auditors. For the fifth hypothesis is the influence of liquidity on going concern audit opinions with company size as moderation. Liquidity is seen by the company's ability to pay short-term financial obligation at maturity using current assets. The connection with company size is that the bigger the company is considered capable of meeting its short-term obligation, which causes the liquidity ratio to be higher. With these companies with high liquidity ratio will be able to reduce the provision of going concern audit opinions by auditors. For the last hypothesis is the influence of solvability on going concern audit opinions with the company size is the moderation. Companies of soft companies of ability can be seen by how much of the company's assets are financed with debt. Connection with company size is that the bigger the company, the larger the total assets it owns, which can make it easier for companies to obtain operational costs in the form of debt, thereby creating a higher solvency ratio. Then the company is also considered capable of meeting its obligation due to its large assets. Move to the last chapter is the chapter 3 research methodology. For the unit of analysis, will be the object of research is companies in the industrial sector. For the population and sample, this research is conducted in a population of 66 companies from industrial sector listed on the Indonesian Stock Exchange from 2020 to 2022. This research uses a proportional sampling method, as the table show on the right. And for the data collection technique, the data used in this research is secondary data obtained from the financial reports of industrial sector companies listed on the Indonesian Stock Exchange from period 2020 to 2022 via the website. The data collection technique used by researchers is documentation technique. For operational variables, there are 5 operational variables. For the first is profitability. For profitability, researchers using the return on assets ratio, and for the liquidity, researchers use current ratio, and for solvability, using debt to asset ratio, and for going concern audit opinion, we'll assess when the going concern audit opinion with code 1, and apart from going concern audit opinion with code 0. And for the company size, just total of the assets. And for the analysis technique, the researchers using the AVS 12 and with descriptive statistic analysis, which is to describe data into information that is clearer and easier to understand. And for the analytic techniques, for the first is logistic regression analysis. Logistic regression measures the strength of the relationship between 2 or more variables and shows the direction of the relationship between the dependent variable and the independent variable. And for the second is regression model, which the equation as is shown in the presentation. And the third is overall model fit with similar to HO when the hypnotized model fits the data, and HA when the hypnotized model doesn't fit the data. And the fourth is coefficient of determination when the R2 is small, the independent variable explains the limited dependent on variable, and if R2 close to 1, the independent variables can provide almost all the information on the dependent variable. And for the next is feasibility of the regression model. If x2 smaller than 0.5, there are difference between the model and the facilities target. If more than 5%, there is no difference with the model and facility unit. And for this next is classification metrics. Classification metric is used to determine the accuracy of prediction, namely how well the classification model can work case. And for the last is for the hypothesis testing with the t-test. If the sig is smaller than 5%, the dependent variable has a partial effect. And if the sig is bigger than 5%, the independent variable has no partial effect. And that's all that from me. Thank you for watching, and thank you.